What's up everyone, welcome back to a new video on the Alien Algo channel. So today we'll be going over the markets again per usual. I will keep this as a very short video because I just think the charts speak for themselves a little bit if I explain you this one simple thesis. The main point we were looking at was this, right? This was just that major higher time frame range. Good, we've broken out of it, we broke up, but then we failed. And where did we fail? Here you see this high being made, see another high being made, and what happens? You are unable to push past this high, you reject, you try another time, you don't even get to the box, and you just go lower. So as of now, it just looks like shit. It's going to be straight up. Because why? In a range, it's super simple. If you break up from a range, you don't want to come back to that range. You can hold this as a little retest, but the more it retests, the worse your probability gets. The more often it retests, the worse your probability gets, right? So if this is not reclaimed, then you're looking at lower. I'll just make it straight up. I'm not going to lie in front of your face. So one little thing I do want to point out with this is the anchored VWAP, and I will show you why this is so important. Here we go. You see, attempt to break the VWAP, you fail. Attempt to find support, you fail, lower. Sell-off, attempt to reclaim, you fail, lower. Here we were finally breaking from that standard deviation again. You make a higher low, you send, you break up. You just don't tap the VWAP. So this is something I do still have on the board, that if this gets reclaimed, the retest of this VWAP becomes very interesting in my opinion. But as long as you don't reclaim this blue line in the middle, it just looks likely to go lower. Yeah. So why is this VWAP so important? This is the volume weighted average price. So in this downtrend, since the autumn high, this is the price where buyers and sellers agreed the most. Because you have to think of markets like a push and pull game. The harder one side pushes and the softer the other side pushes, you get a trend. If both sides push equally as hard, you get a range. So it's an exhaustion game. When one side gets exhausted, the other side wins if they keep pushing. So the point why this needs to be cleared, because if we just retest this and find acceptance back below this point, then that's just pure efficiency from the sell side. And then you would most likely be going into a bigger chop and then just send it up later in the year. But if this VWAP gets cleared, then we can really look at higher levels. And I will show you a perfect example. So think of it again, all-time high, downtrend. What was this? If we just ignore this, this was your all-time high. Yes? So let's run it. We put the VWAP here. Sell off, sell off, sell off, sell off, sell off. What's happening here? You reclaim the standard deviation and you make a higher low. You reclaim the VWAP, you trend to the upside. You lose the VWAP again, you go back to trending down. Yeah, so this is why the VWAP is so important. You just need to know how to use it and where to use it. So if we're looking at the downside, see whether it is here. But I find that we can filter out this range as it's noise, it's history. I don't care about it anymore. The pure part I care about is when did we start trending? That's this point. So if we just map this out, do you see where this is sitting? So let me actually make this a different color for reference. So green, green, and green. So this standard deviation sitting there, VWAP sitting here. If you lose the VWAP, you're looking at this, right? So ideally, I don't see price going below 70K. What I do see is that it would be very logical, like I stated at the start, that if this is not reclaimed, you will be going here. The VWAP in confluence with this low. So with that being said, that was it for the Bitcoin. And now we'll be going to ES. So for ES, you just quite clearly see how ES has been outperforming Bitcoin by a mile. It's just alt season for stocks. If I just take any sort of stock here, SanDisk, here, Intel, Meta chopping like shit, Nvidia just trending up, you just see how all these things are going here. IQE, even just an English stock, it's just alt season for stocks where crypto is really not doing that much. So the very important thing I always look at with stocks is previous day high, previous day low. So again, previous day high, previous day low. So what do you see? Let's pick this downtrend at first. Previous day high, failure at the high, you go lower. Previous day low, you find it as support, you balance. Previous day low, you break it, you go lower. Previous day high, you fail, you close lower. Here, again, same thesis. So as of now, we've just been breaking previous day highs row after row. Super simple. Previous day high, break. Previous day high, break. Previous day high, break. Bit of balance. And here, what happens? The high breaks, higher low made. The same thing keeps going on. But the interesting thing, we're breaking a previous day low again. But quite clearly as well. Look here, we tried to do the same, but this was just barely. And after the open, we've just reclaimed this with quite some speed. So if we just look at stocks, it looks like we could be seeing a bit of a gas off. So the things I mapped out here is the previous day candle. So this was Thursday. This is the Friday candle. We have the Thursday high, the Thursday low, and the Friday high, Friday low. Now we go to the 30-minute. If we just look at this, what happened like on a lower time frame? Boom, 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 boom. Yeah, just the failures at the previous day low. You try to push above, you fail. You try to push above, you fail. So what do we need to see for bulls to keep this going in the right way? This, or the failure of Friday. Yeah, so something like this occurs. Chop, chop. You're looking at this. So I just want to put this theory in your heads. Previous day high, previous day low. Untested previous day points can also be key. If it's like the previous 4 or 5 days, fucking ignore it. Previous day or the day before. So keep that in mind. The next thing we will be looking at is the NQ. We just see pure sending it up. You even see, again, how does this low get formed? You should already see it. What was this, guys? previous day low. You try to break it, you fail, it sends up. It's just simply how markets tend to work. Previous day high, previous day low. You can pick any sort of altcoin, at least for like mid caps and high caps. This theory also works. So overall thesis should be very clear. Markets just looking bad for crypto, and it looks like the stock market is gassing off a little bit. I will quickly run this. The Ichimoku, I've released my template for MMT, where it just has this without the fancy stuff added. This is like the group private, but you can use this wave to find the key levels. So key level, yes, the wave in confluence with the line. Super simple. Lose this, no good. Hold this, good. So what do we see on the lower time frames? Push inside, higher, push inside, higher, push inside, higher, push inside, chop. Next day, drop. Right? Now you're not holding it. So again, if we just go to the 30 minutes, it becomes even more evident. Break above, push. Support, support. Fuck, it doesn't hold. You go a shitload lower. Welcome to the markets. So again, you just see how this just keeps occurring. So with that being said, this will be the end of the video. No, actually it won't. I will be running one more ticker in this vid. CL. This remains the range, which I find quite interesting. The main point I will be keeping my eyes on is just simple. The $100 price point. So again, this is the CL, light crude. I'm not looking at WTE as the US crude oil. I'm looking at light crude oil, CL1. This matters for price. So let's look at the 4-hour VWAP, right? This is the key point to look at. If markets want to continue higher, oil needs to crash. So don't ignore oil. Another thing, the USDT point D chart, we just see it took a lot of the lows and now it's just sending again. And how does this look again? If you remember the start of the video, this is like BTC but in the opposite direction. So what can we take away from this shit? Impulse, chop, impulse, support, support, you get back above it. So this is indirectly why BTC also is doing a little bit shit. Next one to keep in mind, USDC point D. Quite similar chart, the dominance of USDC. This goes up, crypto goes down. Yes, same with USDT point D. This goes up, crypto goes down. So I hope you liked today's video. There are a lot of things to keep in mind, but mainly we're just looking at correlation right now. Bitcoin, again, is a bit in a no trade area where you just don't want to be doing shit. You either want to wait for lower or you want to wait for a bit of a higher reclaim. So, like I always say, alien out.